The president yesterday, we saw him get up and sort of tackle trade. And while he did not promise anything new on the front, he also threatened to hike tariffs again. Josh, when we're looking at these trade headlines, we've been in this for a long time, and it still manages to move the market.
Yeah, it's really important not to buy and sell based on what Donald Trump says about the economy or the market. He also claimed Ivanka Trump created 14 million jobs. So, take it for what the source is. I think big picture. Sorry?
It was 13 million.
So, my apologies. That's probably true. So I think the big picture, if you've been reacting to any of that stuff, you probably have not done well this year. If you've ignored it, here was your prize. You got 10% in bonds. You got 25% in U.S. stocks. You made double digits in emerging markets, Europe, Japan, junk bonds, investment-grade corporates. So that's really been the big picture, is to not pay too much attention.
Paul Hickey, very quickly, what do you feel like about valuations in the market at the moment?
Yeah, so I mean, right now, valuations, let me preface it by saying that they're a terrible timing tool for the market. So, I mean, it's just something to keep in the background. But, I mean, right now you have the S&P 500 in the 83rd percentile of valuations over the last 10 years. And you have the tech sector in the 99th percentile. So you have to be aware of these valuation levels, and that the market isn't cheap at this point. But so against that backdrop, we do have a number of positives going on in the market. What we've been just talking about, one of them is the fact that market, while it sold off a little bit the last 2 days on these China headlines that there were snags, it wasn't really much of a sell-off, whereas 3 months ago we would have seen a 1% sell-off. So I think the market is, adjusting and ignoring some of these headlines, just as Josh was mentioning there, to, ignore these headlines because we shouldn't be focusing too much of attention on them.